Hey there, I thought I would just do a quick trading related video this time. Nothing terribly complicated, but a situation arose last week where I had a deep in the money call in an ETF that was going ex-dividend. Now ETFs do not announce beforehand what the dividend is going to be because, well, they can't. So the question is there a way to estimate that and determine whether you are at risk for assignments on assignment for any short calls that are in the money? So this is after the fact, obviously, because it's well after April 1st when the ex-dividend date was. So what we're going to do is fire up Thinkorswim and use the think back feature to pretend it's March 31st and look at the potential dividend and try to calculate what that dividend would be. Now, Thinkorswim, the font is very small, so I'm going to do the best in the video editing process to make it bigger, but it might be a little bit on the small side. So I will also try to verbalize what all the numbers are, and but just as a warning, the font may be a little bit small. So I have this position on in TLT, and I had already rolled it to May, well before I got the dividend notice. And as you can see, the stock price right now is a little more than 168. At the time I got the notice, it was probably a little bit lower than that, but not much. And obviously a few days have gone past because I'm recording this on April 4th, and it went ex-dividend April 1st, and I got the notice March 31st. But anyways, I have this position on. It's only a one lot, so it's small, where I have a very deep in the money call. It's essentially the same as short stock. It's like a 92 delta, negative 92 delta at this point. So the question I had was, did I have any dividend risk here? Now, I was kind of lazy when I actually did this, and I just Googled what the historical dividends had been for the last cycle or two, and I just used that to ballpark whether I had risk or not. But I figured at the time it might be interesting to do a video on that topic, and I didn't have time because I'm still buried at work, so I will do it now. And what I will use is Thinkorswim's Think Back feature to kind of rewind the clock to March 31st and see how we might actually do that in reality. So I'm going to switch over to Thinkorswim now. Okay, here. So this is the Think Back tab in Thinkorswim. So let us go to the little calendar thing here and set the date to March 31st. And then we are interested in TLT. Come on. There we go. Let us roll. So let's roll this down so we can see the option chain. I've already bought these. Let's see if I can delete them just for there. Okay, so now we're ready to begin. So we can see the stock price is what? It closed at $164.97. So let's just call it 165. So if I short the stock, 100 shares of stock, let's say, I'm going to end up owing the dividend. So I want to estimate what that dividend would be. So I'm going to make a couple assumptions here. One, that there's no time value left in the options, which is not quite true because there are about 3 days left here. And I'm going to ignore the carrying costs other than the dividend. So no interest effects. So if I come here and I buy the 165 call, let's buy the call. Let's come over here and sell. Oops, I sold the wrong put. Where is it? Put here, delete. And I want to sell the 165 put. So there we go. And it's convenient the closing price was almost right at the strike price. I'm just going to ignore whatever intrinsic value was in the put here. And so if I were to enter this in, this is synthetic long stock. Where is the total? It doesn't tell me what the total, I guess it doesn't show me the total, but we could figure it out here. So what here? We receive a credit of $2.33 for the put, and we pay a debit of $2.09 for the call. So there is, if we were to actually do this, we would receive a credit of, what is that, 24 cents? Okay, 24-cent credit. Now, if we assume there's no arbitrage and we were to actually enter this in, this is synthetic long stock, and if we were to sell 100 shares of stock, we'd essentially be locking in that 24 cents of profit. because there's no directional risk because they completely offset each other. So in 3 or 4 days, whenever this expires, we keep that 24 cents. Well, we also know that there's really no arbitrage in the market in any sort of liquid stocks. There's no opportunity for arbitrage. So there's something fishy going on with that 24 cents of basically guaranteed profit. And that, of course, is the fact that there is a dividend. So if I were actually short the stock and it went past the ex-dividend date, I would owe the dividend. So that dividend should probably be equal to the credit I would receive for offsetting that short stock position with synthetic long stock. So in other words, the dividend should be about 24 cents. And the advantage of doing this after the fact actually is we can actually check what the dividend was. So in another tab, I've already Googled TLT ex-dividend. We can click here. And we can see a list of all upcoming dividends. They obviously don't know what it's going to be for the future ones, but with the one that went X a few days ago was, what is this? Basically 24 cents. So we nailed it with our approximation. So I'm short the 143 call. So do I have risk of being assigned on this? Well, first of all, let's find where the 143 call is. I have to change the number of strikes. Let's just do all. And scroll back to 143. Where is it? Strikes. 140, 140, 142, 143. So I'm short this call. So how much extrinsic premium is in here? Well, it's about 30. Is this the yeah? It's about 35 cents. So am I at risk for this if the dividend is 24 cents and there's still extrinsic premium of about 35 cents in there? Well, no, because whoever exercises that call to get the stock and hence the dividend will be giving up more extrinsic premium than the call and then the dividend is worth. So it makes no sense for that to happen. Therefore, I really don't have any risk in this position. So cool. I can just leave it and go about my business. Cool, so that's just pretty straightforward. It's a useful little trick if you have something coming up, and I trade a lot of things like the spiders or the Qs, and they do throw off dividends, and they don't announce beforehand what the dividend is going to be. So this is just a quick way, if you need to estimate what it is. As I said during the video, I just often Google what the historical ones have been for the last cycle or two, and just assume that they're going to be similar. But yeah, that's about it. So cool. Thanks a lot and see ya.